Hi, this is Rahul Sharma here from JM Financial. Welcome to the December edition of the Horizon Videozine. Firstly, congratulations to each one of you for a new all-time high on the Nifty, something that we have been expecting since a while. Well, on one side you had a roaring US markets, on the other side we had the state elections giving their results. A perfect mix for the Nifty to cross the previous high of 20,222. Well, noteworthy are the performance of our baskets that we've discussed in the previous edition of this videozine. In October, we had released the consumption basket, which has done exceedingly well, delivering a return of more than 8% as we speak. Some of the stocks like Eicher Motors, Patanjali have done exceedingly well in this basket. Well, even better are the Diwali picks that we released in the end of October when Nifty was going southwards. Well, some of the stocks, in fact, number of stocks have delivered 20% and above returns in this basket. The entire basket standing at a return of around 16%. Well, something like Canara Bank, DLF are the ones which have led the show, adding around 26% each, whereas NTPC is up by 24%. And GAIL, Gas Authority of India, is up by 22%. So all the stocks except Bajaj Finance have been in the green and have seen a return. The portfolio is seeing a return of around 16%. Well, these are the two baskets that we had discussed in the previous two editions of the videozine. Well, going ahead, what is the bigger question is, what are the stocks, what are the sectors to keep an eye on? Let us break down the market one by one. Well, Nifty has conquered new heights. In fact, it is just 27 trading sessions that the Nifty has seen a rally of more than 2,000 points. And the last 800 points have been the fastest one. Well, not only is this driven by the state election outcome, but also we had a gross underperformance with respect to US markets prior to this rally. And secondly, it was the FIs which were holding short positions which got unwound in this way up, and the short covering led to this big move on the upside. Well, at 20,800, definitely it is advisable to take some money off the table, book profits in sectors in stocks which have done well, but this does not mean that the trend of the market is done with. Well, we have been instrumental in identifying the two major moves in the Nifty in the last 3 months. The first one was the September 1,000-point rally that we had on the Nifty. It hit a new all-time high around 20,222, and post which we had October, which was subdued. And now November has been one of the biggest months in terms of the number of points gained on the Nifty, clocking right from the bottom around 2,000 points as we speak. Well, once we had the breakout from the 19,850 cluster, it was no looking back as FOMO turned into ROMO. As we say, fear of missing out is something which we are all aware of, but it was the regret of missing out which ensured that the participants entered the market, especially FIs pumping in as big as 17,000 crores in a week gone by. So this goes to show that the kind of the momentum that has come in has been backed by institutional participation. So just a week back, where FIs had around 1,30,000 contracts short on the Nifty, that has now turned to almost neutral on the index futures front. Now, blue sky territory, it is difficult to put a number to this uptrend, but having said that, the best strategy would be to book some profits as of now and wait for how the rest of the markets play out. Well, if you look at the US markets, they are at 2-year highs. The Dow Jones has scaled a vertical rally. This was even before the Nifty had started. So somewhere or the other we had to play catch up, and that is exactly what we have seen happening in our markets as well. Coming to commodities, especially precious metals, it is one of those rare instances where not only equities have done well, but also precious metals have also seen a rally. In fact, gold has tested the multiple tops of around $2,100 more than thrice now, and the structure seems that once we safely navigate this $2,100 mark, it is staged for more upside in the coming weeks and months. So the outlook continues to remain positive for gold as long as it trades above the $2,000 mark. Something similar is happening in silver as well, although the rate of move, the momentum of the move, the magnitude of the move has been relatively lesser, but slowly and steadily silver is also asking questions and trying to break out from the mega consolidation that it has been from many months now. So if you remember, we have been bullish on silver in our past editions and continue to remain so as long as there is no negative news coming from China, no negative news developing on the base metals. We feel that silver, being the industrial application, the precious metal should continue to do well. Coming to the currency pair, which is the USD INR, this has been pretty range bound, pretty tight range since many weeks now. But having said that, once we navigate the 83.5 area, there could be a momentum up move happening in here as well. So this is also at a crucial inflection point where we might see further move happening in the USD INR pair towards the 84 mark on the upside. So these are some of the pockets of the market which look pretty sort of some of them look pretty solid, like gold. Silver looks relatively better from a medium to long term scale, whereas USD INR is expected to do well on the upside. There is one stock or one sector which has not participated in this entire rally. So if you were to focus on into the month of December, IT is one space which has not rallied and which could see a round of up move happening from here. From here, Infosys is something that we particularly like. The stock has seen good accumulation around the 1400 mark, and the stock continues to make a higher high, higher low over the last few weeks. We feel that a good 1600 to 1700 kind of a target is possible for Infosys in the next couple of months, and one can look to invest at these levels and add as it crosses the 1500 resistance area. So Infosys from the IT pack looks good. Once the ball sets rolling, the mid cap IT are also expected to participate in this rally and can be looked upon for trading purpose. Another area of the market which has over the last 3 odd trading sessions done exceedingly well is a banking space. So Bank Nifty is where the maximum shorts were present when the markets were underperforming. Now that these shorts have been covered, we feel that there is a lot of catch up to be had in terms of the banking stocks not rallying as much as the rest of the market. So some of the high beta names are the ones where we are keeping our eyes on. The private banks have done well. Amongst the private banks, it is RBL Bank that we like a lot from a medium term perspective. One can look to accumulate RBL Bank around the 250 area. We feel there is a good 20 to 30% upside possibility to be had over the next 6 to 8 months in RBL Bank, and one can look to invest in RBL at these levels, have a stop loss placed at around 220 and can expect a target of 300 to 325. So these are our top 2 picks for the month of December, which is Infosys from the IT pack and RBL Bank from the banking pack. Well, Nifty could be anybody's guess. This is uncharted territory, but having said that, if there is a sizable dip, there is a lot of money waiting on the sidelines which would be happy to enter into Nifty at higher levels, and that could keep the momentum going forward and the adding fuel to the fire. So we all wish that you have a happy and a profitable month of December and look forward to seeing you in the new year. Thank you so much.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.